Hey everyone, it is Jay Soloff from Investors Alley, and we are looking at the options trade of the week. So I am here once again in Market Chameleon looking at the unusual options volume page, and what I like to do is sort it by volume to see where the most active options are trading, at least as relative to what their normal volume is. And despite all the massive amounts of trade going on in USO, the United States Oil Fund, it continues to be the leader. We did have negative oil earlier in the week, negative oil prices, so it doesn't surprise me to see that. But I wanted to look at here is Zoom and Facebook. So you might be wondering why these two are related and both near the top. Well, Zoom has become the de facto meeting place for those working at home, right? It's popular software for video communications. A lot of people have been using it for meetings, and the stock has taken off. So that one has been trading a lot. But what happened today was that Facebook announced that they were going to introduce a competing product that you could talk to up to 50 people in a video environment. And that was its competitor for Zoom. Zoom has had some issues with security, so people may be looking to try some different stuff. And you can see that Facebook was up about 3%, Zoom is down about 6%. Meanwhile, the Zoom options were relatively equal calls and puts, although these probably happened at different times of the day. And then Facebook was almost, it's about 70% calls, which is generally a pretty bullish sign. So you may be wondering, well, why weren't there more puts in Zoom if it was down 6%? Well, we can take a look at the chart here of Zoom, and you'll see what happened is it's actually at all-time highs here. It went up to 181.50 today on basically all the good news of people using it. But then when Facebook announced later in the day, it dropped. So it dropped 6% by the end of the day. So there's probably calls earlier on, puts later on in the day, and you got this situation with just a fair amount of volatility. Looking at the trades, there's certainly a lot of volume in May is the next monthly, so a lot of volume, a lot of open interest. If you're interested in buying puts, the puts are going to be really expensive because of all this volatility, so you may want to consider something like a put spread. So if, let's say, you wanted to buy, the stock is 158, 159, you wanted to buy a put by the 150, it cost you $11, which is quite a bit, and that did trade a lot today. But think about how expensive it is, and let's say instead you buy the 150 140 put spread, and instead of spending $11, you're spending closer to $4. So you have the chance to make, if you buy this and you spend $4, you have a chance to make $6 if it drops all the way down. So that's a cheaper way to get exposure. You can also see there's a fair amount of volume at the 140 strike today, so this may have been a trade that people were doing. So that's the thing when you're getting a volatile situation, a volatile stock. Using option spreads is a good way to lower your price and keep your risk more manageable. So I talk about this stuff. I talk about it, different strategies and different ways to deal with the current market situation in a product I have called Coffee and Condors. It's a bi-weekly live chat, and you can check out more information on it if you go to coffeeandcondorsvideo.com. It'll take you to a page that talks about it and lets you sign up. So check it out.